Hi, thanks so much for tuning in. You're watching BQ Prime. This is Ask BQ, the show that gets you answers to all of your stock-related questions. Now, if you look at the Nifty 50, and that's where all of our attention is currently focused, it's very close to that 20,000 mark. And over the last year, at this juncture, we've seen gains of close to 12%. But the broader markets have done so much more. In that same time frame, the Nifty Small Cap 250 index has gained over 30%, and a lot of the constituents within that have been multi-baggers, to say the least. So this special edition of Ask BQ is meant to get you answers to all of your small cap related queries. If you had invested, say, a year back into a stock and you're wondering what to do with it at this juncture, should you add more? Should you take some profits? Those are the questions that we're going to answer. And to answer those questions, I've got two guests with me today. I've got Ashish Maheshwari, who is director at Arihant Capital Markets, and I've got Gaurav Bissa, vice president of Incred Equities. Thank you so much, gentlemen, for taking the time. And now, just so you know, we floated this a short while back and we've gotten a few queries. I would encourage everybody tuning in live to post your queries on social media and we'll take them up. But the first question I've got is from a very interesting space. Cochin Shipyard is the name of the counter. And we've got Sanjay Jaggi, who's asking, it has run up so much this year. Is it still a good level to buy? So first we'll get a fundamental view as to why Cochin Shipyard has more than doubled. And then Gaurav, I'll come to you on the technicals. Ashish, on the fundamentals, what do you have to say about Cochin Shipyard?
If you see overall, this entire space is getting re-rated. And again, the rationale is the kind of defense budget that now Government of India is having, and their Make in India policy is also adding a lot of business to whether it's a Cochin Shipyard or Majgaon or GRSE, all these companies. Besides this, we have seen very good performance from Cochin Shipyard also. Last year, they did a profit of 300 crores. I'm expecting this year they will do almost 400 plus crores. And on a 16,000 crore market cap company, 400 crore kind of profit is pretty good given the environment which company is into. Besides, the FIs are also increasing their stake gradually in this company from 2.7, now they are at 5.7%. So it shows that a lot of confidence is coming in this particular sector, and Cochin Shipyard is still available as 16,000 crore market cap, which is much lower compared to Majgaon, where Majgaon is. So, in my view, in any correction, you should add this stock. 1100 to 1150 will be good level to accumulate this stock for 1 year time horizon at least.
Okay. But let's also take a check on the technicals. Gaurav, if you have a view on the charts and on the slightly longer time frame charts, I think because people are buying this for a relatively long period, are there levels that you would suggest, one, where you can book profits if you have them, and what levels are looking attractive to add for the slightly longer term?
Good afternoon. So as far as fresh entry is concerned, I would not recommend buying fresh. Whenever you're buying either for investments or for trading, it has to be a function of your stop losses and the prior targets. If you see long-run charts, or even if you see weekly charts, not even monthly, and if you see the previous week's low, that comes around 900. So if you use that as a stop loss, which is still above the breakout area, that itself will mean that you are looking at 25-30% stop losses. So if you are fine with that kind of deeper stop losses, then I think one can start nibbling in. Else, I think it's part to book some. It's good to book some part profits over here. I'm not saying you should be exiting everything. The trend remains strong. They have seen multiple breakouts, but a couple of breakouts which witnessed lower levels, they have achieved the targets of that. So on that perspective, some profit booking is advised, but fresh entry should be avoided at this point in time.
Okay. Next counter is Craftsman Automation. It's not exactly a small cap, but we'll still take this question. Rashida is joining in on YouTube and she's asking about this particular counter. And if I look at the year-to-date returns, it's still about 37.3% or thereabouts. Would you suggest that she can add at this point? She has invested since IPO. I'll come to you, Ashish, on the fundamentals. I think you're on mute.
Good for this.
Yeah.
Fundamentals are quite good for this company, and we have seen the stock is almost at near 52-week high. And we have seen year over year also from 160 to almost 240 crore kind of profitability growth that has come in the company. So overall, this particular sector is looking good, and in my view, you can remain invested here. My target for 1 year will be 5,800 plus in this company. And in long run also, this is a good buy and hold stock.
Okay, so there is potential upside on the fundamentals. Gaurav, any view on the charts?
You're talking about Walchandnagar?
No, we're talking about Craftsman Automation, which is currently the ticker is reading 4979 on the price.
Yeah. So as a disclaimer, we had advised to our clients as well, but we were buying around 2,800. There were two reasons. One, it was retesting the breakout area, and second, there was a yield wave kick that we were expecting. That has happened. As of now, we have booked a good part of our profits, a good part of our holdings. Having said that, I'm not saying it is looking weak. If somebody has bought, one can keep riding it. There's a rising channel resistance at the current juncture. So we may see some time correction, but I don't see a very deep price correction as such. But if somebody wants to buy fresh, then I don't think at the current juncture it garners a buy. As I said, the stop losses will be quite deeper. If you look at the 21 exponential moving at support also on weekly chart, that also comes at much lower level. So for me, a 10-15% correction from here would be a lucrative buy. At the current juncture, I wouldn't recommend buying fresh.
Okay, fair point. The next question is again a stock that has run up quite significantly. Axis Cades Technology. It's currently trading at close to 570, and it has gained about 90% in the year-to-date period. This question is coming in from Akshat Menon, and this is a fundamental question. Ashish, on the valuation side, the price-to-book value, from what Akshat has studied, is almost twice that of the industry. Should it still be bought at current levels? Is the question.
These kind of stocks, you can't decide on price to book value kind of parameters. I think they are more relevant if you're buying a banking stock that one market price to book, etc. Here, in this kind of stock, it's all about the growth story because the kind of businesses they are into, like into manufacturing, engineering, mobility, defense, and automotive, green energy, etc. Wherever the like automation is there or softwares are needed, Axis Cade is a strong presence. Only thing is, if you see valuation-wise, company has incurred losses in last quarter. We have seen so on the basis of fundamentals right now, we can't value this company if you go by your normal fundamental analysis criteria. But future looks bright, and this is the reason the stock is near again 52-week high, because these are all sectors which are racing much ahead compared to other peers. So a lot of investment is happening in this sector. So in my view, Axis Cade, you can remain invested here. And if anybody is looking for fresh entry, 525 may be a good level to even enter in this stock.
Okay. Gaurav, any view on the charts?
Well, if you look at Axis Cade, it started falling from 2016, and it made a very deep correction in 2020, in line with what many of the stocks had corrected. Since then, we have seen a vertical rally, a V-shaped recovery, and it's made a fresh swing high breakout at 400. So in my opinion, one can buy, but one should also be ready to take some volatility into the picture, because we have seen a consistent and a very strong and swift upset from 20 to around 575.80. So some amount of time correction, some price correction will also be seen, but till time it's holding about its previous swing high. I think there's much more upside that can be seen in the stock.
Okay. There was a clutch of stocks, Ashish, you'll remember probably, when ISRO managed to touch down on the moon, that benefited quite significantly from that. And one of them was Walchandnagar. And we've got incidentally a question from Kiran Singh, who's asking, what's your take and outlook on Walchandnagar Industries, given the recent success of ISRO missions? What would you say about this? What are the fundamentals looking like?
Yeah, if you see fundamentally still like in last quarter, they were into again in red. And in spite of all the promising sectors, if you see defense, aerospace, nuclear power, foundry, power, sugar machinery, cement machineries, And all sectors are doing good, but because of the higher debt burden, this company is reporting losses, and last quarter was also not good. And also, this stock moved into ASM, then GSM kind of categories. So, stock is like under quite into consolidation phase for quite some time. My suggestion is that if somebody is looking for fresh entry, 110 can be a good label. But again, you need to have a long-term view for the stock, because we need to see the performance or improvement in performance, or when the company will be flat again. So for me right now, it's not a buy, but only on declines I'll advise to add. And if you're already holding this stock, maybe 150 will be a good exit level in this.
Okay. A couple of live questions coming in on YouTube, and these are fundamental based. Samir Gandhi, who I think is associated with the renewable space, is asking a very interesting question. Because, Ashish, if we look at some of the announcements coming in from even the traditional energy players, a lot of them are pivoting into the renewable space as well. But he's asking, can you talk about a few stocks that are associated with solar renewable energy? And he's named Wari, for example. And he said, can you suggest fresh entry for any of these names?
Yeah, Wari is again a good play in this particular sector, and like they are into more strong play into home solar kind of system. So, in fact, this is a stock that you can remain invested, or you can look at fresh entry. Besides this, I also like KPI Green. This has been a stock which, this is again a company which has done reasonably well, almost 10,000 crore market cap company. And they are also setting up solar power plants and like doing very good work in the state of Gujarat. We have seen almost 100 crore kind of profitability in this company quarter over quarter. So KPI Green and Bari can be a good pick. Still, I'm not by Sterling and Wilson Solar, which is market leader, because again there are so much losses still in spite of Reliance at the end of the year. So these two may be a pick from my side, KPI as well as Bari.
Okay, Gaurav, any view on Wari, for example, since we've talked about the fundamentals of it? Would you have any view on the technicals?
I would not. I mean, it's something which I don't track, so it will be difficult for me.
Anything in the renewable space that you can that you've been tracking actively?
See, one stock that we have been a little bit active as well. Once Inox Wind, it's given a box breakout. You can also call it a Darbox breakout sort of. And the structure is very good. Volume participation for the last 6 to 9 months has been exceedingly well. So there's good accumulation that has happened in the stock, and this is something that we are looking at quite closely. We have advised to some of our clients as well, and from here on also we can see a very strong upside in Inox Wind.
Interesting. Okay, this is not a stock specific question, but it's still an interesting question, I think. Ashish, this one's for you. You mentioned that when you're looking at the value tag for some of these small caps, the traditional measures are not what you look at. So I'm reading Mihir's question. Mihir Joshi is asking on YouTube, what are the general value screeners / fundamentals apart from PE, PB, ROE, ROCE, which can be put across the board for all of the small cap stocks? How would you sort of draw your list?
First of all, I see the quarter over quarter performance of any small cap companies. I generally not prefer year over year. It's more quarter over quarter, because it shows that the kind of growth which is happening in the company, and what kind of sustainability is there in their performance. So first parameter for me is quarter over quarter growth. Then again, parameters like if company is able to reduce their debt from one quarter to another quarter is again key parameter, which shows that they are generating adequate cash flows so that they are repaying their debt. Because in small cap companies, the biggest risk is the debt side. I'm not that much worried as far as debt is concerned in the large cap, but in small cap companies, we need to be really cautious. And third parameter, which I again look at, is EBITDA margin. The kind of margin improvement is there in companies over one quarter to another, which shows that they are having more pricing power and more cost control. And these are 2-3 parameters that you can also keep in mind while selecting any mid cap stock or small cap stock.
Interesting, because I think that perfectly sets the tone for the next question. Yash Jain is asking, is Suzlon's PE of above 100 justified for a stock that is only 25 rupees? Ashish, this one's for you. And then I'll come to you, Gaurav, on the technicals.
Suzlon is again a turnaround kind of story. At 6 rupees, there was apprehension that company might get closed, then there was sudden demise of their chairman, Mr. Tanti. But after that, we have seen remarkable turnaround in the company. And the kind of profitability which has started coming in this company in last couple of quarters is a pure turnaround story. And again, they are having almost 20 gigawatt capacity which is installed across the world. And the way now the momentum is shifting from coal and other fuel, traditional fuel-based place to wind and solar, these are the companies which will really do well going forward also. So Suzlon don't consider again on those traditional parameters a turnaround story, but the only thing is you need to ride the wave for a longer run. Certainly, it will reward you.
Interesting. So you're suggesting a fresh entry even at this point?
Yeah, I'll prefer 22, 23 is okay level to select.
Okay, Gaurav, on the technicals, any view on Suzlon?
Well, to be honest, our clients did buy a decent amount in Suzlon, but for technicals, I have not been keeping this on radar. There was a trend reversal on monthly charts, and the next hurdles are placed at levels of 30, 35. So it can go towards those levels, and we'll review at that point in time whether one should still be holding on. But as such, no major breakouts, so to speak of.
Okay, interesting. So this one is directed at you, Gaurav, on Cyient, and we've got Vikrant Sharma who's asking, does it look like it's consolidating at current levels?
See, it's not, because if you look at the weekly charts, it has been in a very strong uptrend. It witnessed some amount of consolidation sometime in June, but after that, it has been a very strong uptrend. We have seen very strong candles. The volumes have also been quite encouraging. So there's no consolidation as such, but in my opinion, it has run up a lot. And if you see, it's almost more than double rather. Since making lows around 800. So in my opinion, it can go up. But as I said, that fresh entry over here, I think that can be a little bit risky. As a space, IT, I'm extremely bullish. My targets have been for a while of for 40,000 in next 18 months, and it is on track towards that. The other stocks also are looking very interesting, and we have recommended a lot of IT stocks very aggressively to our stocks, to our to clients. But the Cyient is something we recommended quite early on, but at this stage, we are buying fresh.
Okay. Samir is asking a question. I believe, if I remember correctly, Ashish, you had mentioned that EKI Energy is one of your picks in the space, right? He's asking specifically about EKI Energy, and he's asking whether carbon trading is something that can be remunerative from the business point of view.
Actually, I mentioned KPI Green.
Oh, apologies. Okay, so but do you have a view on EKI Energy?
Yeah, EKI Energy, again, a stock which has given phenomenal returns. If you see from SME listing, 50, 60 to 70 rupees stock to 5,000 rupees, then bonus, all those things have, bonus has also come, liberal bonus. But after that, we haven't seen, any major trigger coming in this stock, because again, whatever the benefits related to carbon credit and all those prices were there, they have also tumbled from 2.5 rupees to 50 odd paisa. And there was some auditor related resignation, etc. we have seen in the company. So, working wise also, we have seen from 100 crore kind of profit, which company reported in March, again now 37, 38 crore kind of profit. Only thing is, as the power sector is into demand, so this stock is also doing well. In my view, you can exit this stock at 600 odd rupees, because once the corporate governance related issues come, so institutional investors won't take part that easily. So my advice will be in this power sector, really exit from this on some more increase.
Okay. So we've got another question coming in from Mihir, and he's asking about Elecon Engineering, which incidentally is under pressure today, is down about 4.3%. but still in the year-to-date period, it's a doubler. So I will still ask, I'm going to first ask about the technicals because I think that he's asking about a fresh entry. So Gaurav, any view on Elecon Engineering? He's also asking about Apar Industries.
So when it comes to Elecon, I would avoid the simple reason for that. Since 2021, we have seen stock trading from say 140 to around 800 levels. And since 2021, RSI has been on weekly charts at least, it has always reversed from 84, 85 levels. And this time also it has reversed exactly from that particular area. So when RSI is reversing, it's an indication that we may see some profit booking. Now, I'm not saying that the stock will again revisit 400, 500 levels. But in my opinion, you should be getting some better levels from the current price it is trading at, and some more pressure can be seen. If there is a profit booking happening in the mid-cap space or some other broader markets, then I think Elecon is one that will be more affected compared to others. So in my opinion, it's getting into a weak zone, and it's best avoided at this point.
Okay, but if you bought, I believe Mihir bought about 2 months back, Gaurav, would you suggest taking money off the table now?
Certainly, yes. As I said, such kind of strong reversals on RSI, these are not signs. So, as I said, the stock has moved from 140 to 800, even when the RSI was having resistance 85. So, the point is there can be some falls, but eventually the trend is very strong. So, some amount of profit booking can be done at this point in time, not getting out of the stock entirely, but certainly some profit booking should be taken out.
Okay, the second question was on Apar Industries, and incidentally, we have another question from Aman as well about the same counter. Again, Ashish is a counter that has gained very significantly. What they're asking is, what are the factors that have led to this on the fundamentals, and should you keep holding?
Yes, this is a stock here that you can continue to remain invested. And again, if anybody is looking for fresh entry, pay 4,900 can be a good level to enter. And maybe this stock has potential to even touch 6,000 rupees mark, maybe December or January also. Again, the rationales are, first of all, one of their competitor, RR Travel issue is opening. So again, they are also into same space, that is cables and conductors, etc. So valuation of these companies are again going to be elevated. Besides is that into specialty oil and lubricant business along with cables and wires also, so which is also doing well because now crude prices are going up, so inventory valuation will go up. So I'm expecting against 630 odd crore profit what they did last year, minimum 850 crore profit they will do this year. So market cap is also 19,000 crore market cap, and this will be a good value pick even at this price point.
Okay, so we're winding down. I'll take a couple more questions. And by the way, in case you're tuning in live and you've got questions, now is the time to post them. Otherwise, you can send them and we'll take them later when we do another show of this sort. We were speaking about this this morning, in fact. BSE has seen a very sharp return in the recent past. Just over the last month or so, it has gone up very significantly. Janisha is asking whether you can explain the recent market dynamics that have influenced the stock exchange's performance. So we'll take both the fundamental and the technical check. Perhaps we can take a technical check first. Gaurav, what are you seeing on the charts? There is considerable strength, looks like.
Yes, so if you look at the BSE, it was trading in a consolidation phase from early 2018 until 2021. It was still stuck in the range, and from there we witnessed a breakout sort of happening. In 2023, the stock again corrected from around 900 levels to 450, 420, and it made a retest, and it has moved exactly from the retest area. It gave a breakout from falling wedge pattern, and now it has seen a fresh swing high breakout on weekly and monthly charts at 1,065, 1,070. So the structure remains positive. Volume participation has been very strong, but the move has been very, very strong. So somebody who has already bought can keep riding, not even need to book some partial profits because the trend is still very strong. But fresh entry should be avoided because even if I take the previous swing high breakout, that comes at 1,070. So around 250 points lower. So in my opinion, fresh entry should be avoided, but one can keep holding, keep riding the stock further upside.
Okay, what about the fundamentals? Ashish, anything to add on BSE?
First of all, buyback was one of the trigger. If you ask me about the BSE, and this has happened, and the stock has really moved quite swiftly. And a couple of more things are happening. First of all, the way retail participation is going up in stock market for direct investing other than mutual funds also. So volumes are going to go up in BSE and NSE both. Second, relative valuation of what NSE is being quoted as almost 3,300 rupees per share. So there's a big valuation gap between BSE and NSE, and sooner or later NSE will get listed. So I'm expecting maybe by the time NSE will get listed 1 year down the line or 2 years down the line, this stock has potential to even give you 50% kind of upside. And I don't see any downside still in BSE if we even buy now.
Okay, fantastic. All right. So on that note, Gaurav as well as Ashish, thank you so much for joining in and for giving us all those answers. I know that we didn't stick only to the small cap space. We took a few outside of that, but then that's how questions have come in. Again, thank you so much for taking the time. Viewers, well, it's been an absolute pleasure bringing you this show, and hopefully we've helped you make your trading and investing decisions a little easier. Do continue to speak to us on any one of our social media platforms, and stay tuned. Lots more coming up over the course of the day. This is BQ Prime.